Welcome to the latest episode of Future Banking TV, where we return to the offices of financial crime specialists NICE Actimize. We speak once again with Micah Willbrand and discuss how financial institutions can continue to provide a smooth customer journey while still adhering to some of the evolving regulatory demands being placed on them from a customer due diligence and KYC perspective. We also look at the potential impact that some of the latest technological advances from big data and robotics through to AI can have on AML programs. Micah, welcome back to Future Banking TV.
Thank you, it's good to be here.
I think the last time that we saw you was at the beginning of 2016, and we focused very much on the need for there to be a culture of compliance in order to deliver true innovation into customer due diligence and KYC processes. How, if at all, have you seen things change within the industry since then, and within Actimize for that matter?
I think what we've seen over the past year is the idea that culture of compliance is really starting to take hold, take root. You're starting to see what they talk about as that top-down approach. So from the CEO and the board level down to have the level of compliance going down to that frontline staff. So we've started to see that come through with various training programs, employee onboarding programs, and getting that message through. So now they're shifting a little bit more of that focus back into the technology side of things. And what they're really focusing on now is really about customer due diligence. We've seen from a market the past year that there's just been a lot of work with getting more information around owners and around individuals that are banking with the financial institutions.
Given all these regulatory changes, we're seeing a lot more push, shall we say, when it comes to beneficial ownership. Have you seen any changes in the attitudes of financial institutions when it comes to addressing this particular issue?
We have. For sure with the regulations being pushed through with the fourth anti-money laundering directive in the US and APAC, we're starting to see financial institutions, they're being forced now. It's part of the regulations coming into effect, here in 2017. But the interesting thing is, the amount of institutions that still don't collect it. It's kind of mind-boggling. We did research last year. Nearly 40% of financial institutions that we surveyed weren't even collecting simplified beneficial ownership information. So just the majority owner who owns 50% of your company or not. We have seen that number drop significantly. In the research that we just released, that number is down to 30%. So we are starting to see financial institutions really take a serious look at this. Because the biggest change, as we spoke about, is it's not only the beneficial owner, it's that ultimate beneficial owner. And that's really key. It's finding that owner down to a person, because that's where we're starting to see a lot of the financial crime from money laundering or fraud or terrorism financing, whatever you want to talk about. It's really down to singular people owning a distributed kind of network of businesses. And we saw this in the Panama Papers last year. And this is another reason that financial institutions are taking it more seriously, not just from the regulatory perspective, but also the public perception and the reputational. And finally, what these tools are doing is allowing the financial institutions to also save some costs. As you can imagine, if you've ever applied for a mortgage or any kind of, high-end financial product, there's lots of documents you have to provide, lots of questions and whatnot. And it can take a lot of time and effort. It's not a very pleasant experience for a lot of customers. So from a technology perspective, we're really trying to make that a lot easier for financial institutions to gather the information so people aren't having to submit the same information 2, 3, 4 times to various departments. So on the back end, stitching it together so there's more of a common back-end experience for the financial institutions to make it more easier for that customer journey when they're coming on board.
You mentioned technology. Of course, we know technology can be a great enabler for automation, but there are so many buzzwords running around right now, from big data and robotics through to Bitcoin and AI. But how can CDD and KYC programs really benefit from some of these latest advances?
Yeah, I think, and as you're right, there are lots of buzzwords that are running around out there. And the three that we really see taking hold are around robotics, around distributed ledger or blockchain technology, and around more machine learning and analytics. So when we talk about robotics, we have a very established case management system. Banks, when they're training their analysts and they're bringing them on board, they have them go through a very strict regime on check Google first, then maybe go check a private database and a third one, and they have to do that every single time. And what we're trying to enable via robotics is to automate a lot of those very manual basic tasks to free up time to really focus on the really difficult tasks that do require human intervention. In fact, we've done some research around the costs associated with analysts working compliance alerts. And we noticed that traditionally in the AML arena, the common joke among the professionals in this area is that AML gets a blank check. And for years it's been the case, is that financial institutions under the threat of regulators, under the threat of fines, have just been hiring thousands and thousands and thousands of analysts. And it's becoming quite a burden. Banks are now starting to say, we need to train our staff better. And with that, they're going through, and that's why the technology tools that we've been developing at Actimize have really been helping them, is that when they have a common case management system, common CRM system to work the alerts through, then banks can really start to hone their training programs with their existing staff to look for certain things. So, from an automation perspective, that's where robotics is really gonna help financial institutions and really help make the situation and the environment better for customers and financial institutions. The real key thing that we see with distributed ledger is what they call the immutable record of a distributed ledger. And what that means is once an agreement has taken place within a distributed ledger, it can't be changed. It's unalterable. But it's also open and it's saved among the ledger. That's why they call it distributed, because there are multiple different places this is saved. But when banks have access to that distributed ledger, all the areas of a bank can then tap into it, and no one can make any modifications to it without it being recorded, which doesn't really exist in sort of the standard databases that we have today. And also from a big data perspective, data costs a lot of money. It doesn't seem like a lot of information, but when you're talking at a banking level where you're doing 40 million, 50 million transactions a day, you're talking gigabytes to terabytes of data being stored every single day on their customers. With big data technologies, though, is basically that race to zero has been in full force. So now banks don't have to make an economic decision on how much data they can store, as they can keep all that data. So when you combine that with the distributed ledger, I think you can see that natural synergy coming out is you're storing all the data that you can in a way that's immutable, in a way that people can really access it very easily. So what that enables is a much higher level of analytical decision making and decisions coming through to better the customer experience and making it a quicker and faster way.
Talking about moving forward and helping banks going forward, one of the largest promises seems to be around the AI side of things. I mean, what's Actimize's take on how this could potentially apply to the AML arena?
AI, is a very exciting thing that we're going to see, throughout, all technology. So when we talked about the big data and the distributed ledger and having access to more information, what that really, does for a company like Actimize is that it enables us to build what we're calling just second generation analytics. So now we're having, because we have access to this explosion of data on customers, we're now able to build better analytics and more finely tuned analytics that will make it better and easier for financial institutions to make a decision in a compliance realm. AI can really move into that machine learning area where the analytics can be self-learning. They can start to see patterns and analysis on how you're making decisions. With all these new technologies coming through with robotics and the automation and big data and distributed ledger, it just makes the future a lot brighter if I'm an AML professional in the banks. No longer is it going to be a situation where you just have to hire thousands and thousands of people, is you can really start to depend on the technology to really help and make the situation better, and it improves everyone's experience from the bank all the way through to the customer.
Thank you very much, Micah. Always wonderful hearing your insight.
Thank you for your time, Sanjeev. I appreciate it.
It's quite clear that simply hiring more people isn't the answer for financial institutions when it comes to addressing AML. From what we've seen and from what we've heard so far, the next generation of AML compliance will very likely see a convergence of the transactional monitoring and CDD areas. And what companies like NICE Actimize can do is give the people working within compliance the edge in technology to help them not only make better decisions on their customers, but also have a clearer 360-degree view of them. Technology has indeed very much moved on and caught up. The challenge now is for all financial institutions to do the same.